Good morning, dear students. Today we are going to discuss about classification of taxation on the basis of tax rate. Before discussing the concept of classification of taxation, you should have a knowledge about tax. What is meant by tax? In simple words, tax is one of the important source of public revenue, or tax is one of the important source of government revenue. Government revenue means what? Government revenue means income of the government, or source is known as government revenue or public income. Public income can be classified into two: tax revenue and non-tax revenue. In simple words, tax is a compulsory contribution. Tax is a compulsory contribution from a person to the government. That means tax is a compulsory contribution from a person to the government. That means tax is paid by a person to the government. Tax is a compulsory contribution from a person to the government, defray the expenses incurred in the common interest of all without reference to special benefit is conferred. That means tax is a compulsory contribution. It is paid by the person to the government. The revenue from tax is used for the collective need of the society. That is tax. Features of tax. One of the most important feature of tax is a compulsory contribution. Another most important feature of tax is tax can be paid directly or indirectly. On the basis of impact and incidence, tax can be classified into two: direct tax and indirect tax. In the case of direct tax, the impact and incidence is on the same person. Impact means initial money burden of tax. Incidence means ultimate money burden of tax. In the case of direct tax, the impact and incidence is on the same person. But in the case of indirect tax, impact is on the one person, incidence is on the another person. In the case of direct tax, impact and incidence is on the same person. For example, personal income tax. But in the case of indirect tax, impact is on the one person, incidence is on the another person. For example, GST. This is another most important classification of tax, and most important feature of tax is tax can be paid directly or indirectly. Another feature of tax is personal obligation. Payment is personal obligation. Next feature is tax is paid out of the income of the taxpayer. That is another most important feature of tax. Next feature is tax is paid regularly or periodically. This is another most important feature of tax. These are the major features of tax. Then, on the basis of tax rate, taxes are classified into four. First one, progressive taxation. Second one, proportional taxation. Third one, regressive taxation. And fourth one, degressive taxation. On the basis of tax rate and tax base, taxes are classified into four. First one, progressive taxation. Second one, proportional taxation. Third one, regressive taxation, and fourth one, degressive taxation. And before discussing these four concepts, you should understand tax base and tax rate. Tax base means is the amount to which a tax rate is applied. That means income. For example, income. Tax rate means tax rate is the percentage of the tax base that must be paid in tax. Once again, tax base is the amount to which a tax rate is applied. Next, tax rate means tax rate is the percentage of the tax base that must be paid in taxes. On the basis of tax rate, taxes are classified into four. First one, progressive taxation. First one, progressive taxation. Progressive taxation. Progressive taxation shows the relationship between tax rate and tax base. In the case of progressive taxation, a progressive tax is that in which the rate of the tax depends on change in income. That is, the rate of tax increases with the increase in income. The higher the level of income, the higher the tax will be, and vice versa. That means in the case of progressive taxation, it shows the positive relationship between tax base and tax rate. If income increases, tax rate also increases. For example, tax base or income. Next column, tax rate. Third column, amount of tax. Amount of tax. Progressive taxation means if income increases, tax rate also increases. For example, if income is 1000, tax rate is 10%. Progressive taxation shows the relationship between tax base or income and tax rate. If there is positive relationship between, in the case of progressive taxation, there is positive relationship between tax base and tax rate. That means if income increases, tax rate also increases. If income is 1000, tax rate is 10%. Amount of tax, it means out of the 1000 rupee, the person will pay 10% of tax. That means 10% of 1000. How to calculate 10% of 1000? 1000 into 10 divided by 100. That is 100. If income increases from 1000 to 2000, the tax rate also increases from 10% to 50%. Then amount of tax is 300. If again income increases from 2000 to 3000, again tax rate also increases from 50% to 20%. The amount of tax is 600. Okay, then again income increases from 3000 to 4000. The tax rate also increases from 20% to 30%. What is the amount of tax? Amount of tax is 1200. This table shows the relationship between tax base and tax rate. It is progressive taxation. Here income increases or tax base increases, tax rate also increases. There is positive relationship between tax base and tax rate. If income increases, tax rate also increases. Then diagrammatic representation of progressive taxation. In the case of diagrammatic representation, here tax base is represented in the x-axis. Tax base or income. Tax base or income. Tax rate is represented in the y-axis. Tax rate. In the case of progressive taxation, there is some positive relationship between income and tax rate. First case, in tax base or income is 1000. At that case, tax rate is 10. Here, the graph of progressive taxation is like supply curve. Here, income increases, tax rate also increases. This curve shows the positive relationship between income or tax base and tax rate. Here, income increases, tax rate also increases. Then, in the case of progressive taxation, income increases, tax rate also increases. Then next classification is proportional taxation. In the case of proportional taxation, a proportional tax is one in which the rate of tax remains the same irrespective of the income level of income. Here the percentage of tax is levied on all income groups. The tax amount is simply calculated by multiplying the tax base with the tax rate. In the case of proportional taxation, Second type of taxation is proportional taxation. Proportional taxation is, second one is proportional taxation. Proportional tax. In the case of proportional tax, if income increases but tax rate remain constant. Here, income is 1000, tax rate is 10%. If income increases from 1000 to 2000, tax rate remain constant at 10%. In this case, if income increases, tax rate remain constant. Here, amount of tax is 100, 200, 10% of 3000, 300 and 400. In the case of proportional taxation, if income changes but tax rate remain constant. Here the graph of proportional tax is like horizontal line. It shows that if income increases, tax rate remain constant. Okay. Next one is regressive taxation. Regressive taxation is just opposite of progressive taxation. Third one is regressive taxation. Third one is regressive taxation or regressive tax. In the case of regressive tax, in regressive taxation, the higher the income of the taxpayer, the smaller is the proportion of income he contributes to the government in the form of taxes. That means, in the case of regressive taxation, if income increases, at the same time tax rate will decline. If income is 1000, tax rate is 15 or 10. If income is 1000, tax rate is 10%. Then income is increases from 1000 to 2000. At the same time, tax rate will decline. Tax rate will decline. That is 7%. Clear? Again, income is increases from 2000 to 3000. The tax rate will decline from 5% to 7% to 5%. Then again, income is increases from 3000 to 4000. The tax rate also decreases from 5% to 4%. In the case of regressive taxation, regressive tax, if income increases but tax rate will decline. There is some opposite relationship between income and tax rate. Here income is 1000, tax rate is 10%. That means amount of tax is 100. Clear? Then income is increases from 1000 to 2000, tax rate will decline from 10% to 7%. That is tax rate is 140. Clear? Then income is again increases from 2000 to 3000. Tax rate will decline from 7% to 5%. That means amount of tax is 150, and at last amount of taxation will become 160. Here, in the case of regressive taxation, here tax base and tax rate are inversely related. If income increases, the tax rate will become negative. This is regressive taxation. Clear? Then last one, degressive taxation. Degressive taxation. Degressive tax. Degressive tax is a combination of progressive tax and proportional tax. In the case of degressive tax, under this tax system, the tax is progressive up to a certain limit. After that, the tax may be charged at a flat rate. In other words, degressive tax system is a mixture of proportional as well as progressive tax system. In other words, degressive tax system is a combination of progressive and proportional tax rate. In this case, it is a combination of progressive and proportional tax. That means degressive taxation up to a certain limit, up to a certain limit, tax rate is increases with the increasing income. After a particular point, tax rate remain constant. Here, income is 1000. At this case, tax rate is 10%. Amount of tax is 100. Again, income is increases from 1000 to 2000. Here, tax rate also increases from 10% to 11%. Amount of tax is 220. Again, income is increases from 3,000 to 4,000 or 2,000 to 3,000. The tax rate also increases from 11% to 12%. In this case, amount of tax is 360. Again, income is increases from 3,000 to 4,000. Tax rate also increases from 12% to 13%. In this case, amount of tax is 520. Here, this is first stage. In this first stage, if income increases, tax rate also increases. This is like progressive tax up to a limit. After again income increases from 4,000 to 5,000, tax rate will become constant, 30. Clear? In this case, it's a combination. Degressive tax is a combination of progressive and proportional tax. Up to a particular level, the tax rate increases with the increasing income. After a point, tax rate remain constant. This is degressive tax. Degressive tax says that in the first stage, tax rate is increases with the increasing income. After a point, tax rate remain constant. This is a graph of degressive tax. In short, in this class we discussed about what are the classification of tax on the basis of tax rate. On the basis of tax base, taxes are classified into, on the basis of tax rate and tax base, taxes are classified into 4. Progressive tax, proportional tax, regressive tax and degressive tax. In the case of progressive taxation, tax rate increases with the increasing income. In the case of proportional taxation, if income increases, tax rate remain constant. Third case, regressive taxation. In the case of regressive taxation, if income increases, tax rate become falling. Last one, degressive taxation. Degressive taxation is the combination of progressive and proportional taxation. This is all about today's class. I would like to conclude my class. Thank you.